Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 11th of July. All right, now coming to you a little bit later than usual, just a few little IT glitches. Now, just as we come through the end of the Asian session, obviously the Powell's testimony, the Fed chairman, right, very right on the money of dovish, a lot more than what the market anticipated, especially after the strong US non-farm payrolls and a few other sort of inflation numbers suggesting that inflation is improving, right? So he says he's going to act as appropriate. So I don't think it's all over yet, because what happened is, so if I just give you a bit of a sneaky peek of where we were yesterday, you look at the overall aspect here, we were looking for a neutral Fed, which would have probably sent these pairs into overdrive and starting to see them break longer term levels. And that really gets us into trades, right? And the US dollar should have gone up. Now that's if they were, as I said, neutral, which a lot of the market, by the way the markets have reacted, were expecting that. You look at to where the currencies are now, and this is what we've got. We're back to where we were sort of last week before the US non-farm payrolls, right? So we got a little bit of, well, at the moment, I was going to say we got a bit of US dollar weakness, but of course that is the case as the market reconfigures the expectations for what the Fed are going to do. Now, this is going to really set up a major trading opportunity on Friday on the US CPI numbers. But just have a look at this. This is where what that news or release has created. It's diffused a lot of the moves that were building up, especially on Euro, Sterling, Aussie and Kiwi and Dollar Swiss. And it's all the hourly stuff, right? So there's a fair bit of noise involved. And what it does is, unfortunately for us, it really diffuses most of the pairs from starting to get into some sort of trending markets. So it's another real sort of slap in the face there. Now, if I give you a look at the charts, I mean, you just got to piece this together. And I've left the trend lines, where they were yesterday, so you can start to see what's going on. Now, it's not a case of actually buying these pairs. Like, yeah, Aussie's gone a little bit higher. I mean, Kiwi market was obviously a lot shorter, and the Euro market and even Sterling's rallied, right? So, and we've seen the dollar fall against dollar CAD, and a really nice clean break there of 108.20 on dollar yen. But you know what? These pairs, if I'm looking at, say, the Aussie, Kiwi, Sterling and Euro, you're not really buying them, right? Because their economies are already, the central banks have already signaled that they are, worried about growth, and they're already dovish. So this is just a repositioning, right? So you've got to really wait and sort of work out what's going on. The next big move will come from the US CPI numbers, absolutely, for sure. And if those numbers are strong, well, then it goes against what the Fed are looking at. So what you got to do is just wait. This is not a situation where you redraw the trend line just yet. It's actually just freshly broken through. You can see the barroom brawl there. It's just a little bit higher, not too much to get carried away on. I'm using these trend lines now to get into the next trade. So, I like the look of dollar yen there. It was such a nice break. You can see how that affected that trend line was. So looking to sell basically back on a rally at this point. Euro, Sterling, I just don't know at this stage. I don't feel like they're going to keep going, any of these pairs, unless this is where they will go, is if the US CPI numbers come Friday are actually weak. So the US CPI numbers, funnily enough, you get that build up of pressure, and this is where the numbers really, really come into play. And just ahead of that, I was just going to say the ECB minutes, just keep an eye on this, right? So this gives us another chance to have a look at the what's happening inside the brains network of the ECB with regards rates. They've already told us that growth was going crazy, all these things. I probably expect to see some really dovish outcomes, maybe some new QE, thinking of that, et cetera, and then the US CPI numbers. Actually, maybe I was a little bit wrong there. It's today they're scheduled. So that's actually even better, right? So we've got a good opportunity today with the full day of trading Friday to really rip into the US dollar. And this is going to be really important straight on the back of the Fed. Now, what would be great here, you want to match, right? You want to match with the Fed sentiment with the data. So what we're looking for is weak numbers, right? We get weak numbers, we start to get some continuity with the outcomes. And that's where we start to see trending markets, right? So if we get a really weak CPI, well then, of course, for sure, they'll be cutting probably in July. And you'll see the daily trend break, and then you'll start to see these four pairs down here put pressure on the top side, and we might see a bit more of a run. And you know what? I think you could probably potentially get your teeth into those. Obviously, dollar CAD to me is the best pair to be trading. It's breaking down on all trend lines, all time frames, as well as that overlying Fed dovishness. All right, so that's where we are. So you've got a fair bit to look at. The Bank of England, obviously, financial stability report. Keep a very close eye on that. That is going to be of major focus. We've got these final German CPI numbers. I'll just blow this up. You can have a look across the board here. So we've got, CPI out of Germany, but the US CPI numbers. Now, there's a couple of numbers here to keep an eye on. The ones down the bottom here are the key ones to be looking at. We're looking for weakness. We will start to get a bigger run on those other currencies. If this comes in strong, we're going to be back exactly where we were sort of like the day before, and everything's just going to be trading sideways. So once again, what we need is give us something to work with, and that's weak numbers. You'll see when you factor in weak numbers here, we're really looking for sort of clean entry levels. You know what? We don't really have a lot because they're already in the middle of a range. Okay, and with that sort of profile, it gets a little bit tricky. So you're going to have to sort of be buying at market, probably reducing your trade size with a bigger stop to get into the trades and see these things run. They will not run, I don't think, unless we get this US CPI weakness, and that's where they will start to get some action. So potentially Aussie, Kiwi, Euro and Sterling, they're all moving up. Dollar CAD's already sort of shifting down, as is dollar yen. It's all about the CPI today, and I think it's going to be a super opportunity. Hopefully for us, and this is where you've got to manage your own sort of expectations, have the as expected result factored in so you don't get disappointed, just start trading because you're frustrated. This is about professional trading. Remain calm, wait for the numbers to drop, and then trade, right? So don't get all bent out of shape if this comes out as expected. And that's pretty much where we are. So really good build-up. A bit disappointing that the Fed have actually pushed that dovish side of things, but it does set us up for a good trade today with that US CPI. All right, guys, have a good one. Cheerio.